the dynamics of the debt trap are basically when you get an increase in the cost of that debt in the form of interest rates that is increasing at a rate faster than the rate of GDP growth, then you're in a debt trap. It's quite simple. It just goes to the point where suddenly nobody's going to lend to you because, well, I mean, what do? You put up the interest rate, and the interest rate then works against you because it makes that relationship between interest and GDP, interest growth and GDP growth, it makes it even more disfavorable to GDP growth. And, the debt, if you like, the interest rate side of the equation rises even faster. It's a classic debt trap. And we're on the verge of it. And what happens in both America and the UK is we have a large contingent of foreigners who we rely on to buy our debt. They will go on strike unless the interest rates are higher. But as I said, if the interest rates are higher, we're dead anyway. So we've got ourselves into this silly situation from which there is actually no...
You're watching Silver News Daily. Subscribe for more.
Imagine this. A precious metal so undervalued that experts are now saying it could shatter all-time highs in 2024. Yes, we're talking about silver. Alasdair Macleod, the leading voice in market trends, is making some shocking predictions about where silver's headed. And if you're looking to protect your wealth, you're going to want to hear this. Stick around as we dive into why silver might just be the smartest move you can make this year.
As long as it's not financing consumption and it's financing production, is actually non-inflationary. If anything, it's disinflationary in the sense that it leads to falling prices. So, I mean, I would say that private sector debt is very, very different from public sector debt. Very, very different. And you can't just make a straightforward comparison. The idea that that if you look at sort of total debt, sort of total debt in the economy, they say something like, I don't know, I'm just making a figure up, 300%, of which government is only 100%. The problem is in the private sector. No, it's not in the private sector, it's in the government sector, because it spends in excess of its tax income unproductively. It is therefore inflationary. That is the debt that's the problem. And the debt trap, the dynamics of the debt trap are basically when you get an increase in the cost of that debt in the form of interest rates that is increasing at a rate faster than the rate of GDP growth, then you're in a debt trap. It's quite simple. It just goes to the point where suddenly nobody's going to lend to you because, well, I mean, what do? You put up the interest rate, and the interest rate then works against you because it makes that relationship between interest and GDP, interest growth and GDP growth, it makes it even more disfavorable to GDP growth. And, the debt, if you like, the interest rate side of the equation rises even faster. It's a classic debt trap. And we're on the verge of it. And what happens in both America and the UK is we have a large contingent of foreigners who we rely on to buy our debt. They will go on strike unless the interest rates are higher. But as I said, if the interest rates are higher, we're dead anyway. So we've got ourselves into this silly situation from...
Now, before we get into the nitty-gritty, let's talk about why silver stands out among precious metals. Unlike gold, which tends to hold a steadier value, silver is famously more volatile. But this isn't necessarily a bad thing, especially in today's market. Silver's price can move dramatically with even a slight shift in demand, making it both a challenge and an incredible opportunity for investors. Imagine this. A small price change in silver has the potential to lead to significant gains. Why? Because it's affordable, meaning investors can buy more of it, amplifying even minor price swings. And with economic uncertainty on the rise, silver's volatility could be a major asset. Stay with us to learn how this quality, often seen as a drawback, could actually be the key to unlocking some serious profit potential.
But I wouldn't hang around and assume that she would be given good advice, because the track record of presidential advisors doesn't actually fill me with confidence. So, yeah, I mean, it's just not looking good. And I think that the other aspect of this, and I'm writing an article on it actually for publication later this week, which probably come out, I don't know when this recording comes out, but I suppose about the same time. I think that Russia in particular is being forced into a position where she will take avoiding action. By avoiding action, I mean in the financial sense. It is so clear that she should go on to a gold standard. I mean, absolutely clear. She's got interest rates of 18%. Why? Because nobody trusts the fiat ruble. It's not because her economics are rubbish. It's because nobody trusts the currency. And put it on a proper gold standard is very easy to do. My article shows how to do it. So, it's one which people might like to read. Suddenly, I think that the Russian situation will begin to resolve itself, and from Russia's benefit. And the other thing, of course, is that as soon as someone goes on a gold standard, it's rather like the fable, if you like, about the little boy who cried out that the emperor isn't wearing any clothes. I think I'm right in saying that the Americans, one of the reasons they brought about regime change in Libya was because Gaddafi wanted to set up a gold-backed Central African currency, which didn't go down too well in Washington. So, yeah, Russia could do it, and I think the Saudis would follow. And I think they're going to be driven into that solution, if you like, to protect their own currencies in face of a dropping dollar. And the other thing is that Trump has said that if he gets elected, he wants a lower dollar anyway. So, yeah.
Silver isn't just a pretty metal. It's an industrial powerhouse. From smartphones to solar panels, silver plays a vital role in today's tech-driven world. In fact, about half of all silver produced globally goes directly into manufacturing and technology. Think about it. Every smartphone in your hand, every electric car on the road, and every solar panel installed adds to silver's demand. And here's why that's huge. With green energy initiatives on the rise, industries are hungrier than ever for silver. As technology advances and more countries ramp up their renewable energy goals, silver's demand could reach unprecedented levels. So, while gold may be the classic choice, silver's unique industrial demand could set it on a very different and very lucrative path. But this is just the beginning. Stay with us to see how silver's dual role as both a precious and an industrial metal could make it one of the most valuable assets this year.
I think the political class are going to cut back on spending until there is an absolute disaster and they're forced to do so. I think in the UK, it's interesting, the House of Lords released a report, I think it was today or yesterday, very, very, very recently, certainly, about the debt situation. And, the interest cost has just gone through the roof. There's a lovely chart in there which just illustrates it. So there are people, if you like, in the political world who do actually see this, but this is yet to be accepted, I think, by the policymakers. They want to continue to spend, and our wonderful new government, the first thing they've done is give very, very expensive pay settlements to their cronies in the unions and, in the NHS. Our NHS, we're told. It's not our NHS, it's the government's NHS. They're providing the service and they don't do it terribly well. So, the economy basically, I think it's approaching a cliff edge. I really do. And it may not be the UK's problems that actually trigger it. I suspect it could well be America's problems. We've got a presidential election, and at the moment we're sort of focusing on the politics and assuming that there's sort of stimulation and all the rest of it in a political, in a presidential year, and you get idiot theories like people say, well, the markets don't go down in presidential years, or whatever the meme is of the moment. I made that one up, incidentally, but I don't think it's too far from the truth. So, but I mean, you look at both the presidential candidates, Trump is talking about massive cuts in taxation. And he's also talking about massive cuts in public spending. That's not going to happen. I mean, for goodness sake, it really is not going to happen. And as for Kamala Harris, she knows absolutely nothing about economics. We've just got to pray that she takes good advice. But
let's talk about the bigger picture, economic instability. We're seeing rising inflation, unpredictable interest rates, and a shaky global economy. Now history tells us that when things get rocky, investors start looking for safer assets. Typically, that means flocking to precious metals, like gold, which has long been considered a safe haven in uncertain times. But here's the twist. Silver is quickly becoming the underdog that could outperform all other assets when things get tough. You see, while gold remains a solid choice, silver has something unique going for it. Not only is it more affordable, making it accessible to a broader range of investors, but its industrial uses mean it often surges in value when the economy takes a hit. So, could this economic turmoil be exactly what silver needs to shine? Stick around, because up next, we'll dig into the cyclical market trends that might just push the silver prices over the edge.
And that, I think, is the next stage. I mean, I don't know how long it'll take for people to begin to understand this. But I can tell you, domestic residents in America and the UK do not understand this at all. They think a pound is a pound, a dollar is a dollar, and I can, go out and spend it, hang on to it, whatever. And its price is rising as far as they're concerned, not the purchasing power of their currency going down. At some stage, they will wake up to this. And then it's finished. It really is finished. The fiat currency world is finished. And I don't know how long it'll take. I mean, in the 70s, we got nearly to that point. Really, I think following the devaluation, which was 1968, something like that. And then we got to, in the 70s, we had the crisis where the IMF bailed us out in sort of around about the end of 1975, beginning of 76. Interest rates had to rise to 15% plus. I mean, well, that was the coupon on 3 of the gilt issues. They were admittedly medium dated ones. The government was forced, the Labour government at the time was forced to do something which it really didn't want to do, and that was raise taxes, cut spending, which it did. It had to bring the budget back into balance, and the thing was saved. We're a long way from this sort of activity. But until then, the currency was collapsing. I mean, I remember briefly, inflation was recorded at 24.5%. I mean, think what that does. So this sort of 70s problem, which I think we now face, is all ahead of us. And but this time, after all this long period of fiat currency suppressing interest rates, etc., I don't know how long it will be before the whole system falls apart, but probably not terribly long. Year or two, maybe 3 if you're lucky. That's assuming, of course, that the conflict in Europe and the Middle East doesn't flare up and hurry things along.
Let's break down how market cycles play a crucial role in the precious metals game, especially with silver. Silver prices, like those of many commodities, are highly influenced by cycles in the economy. When markets enter periods of uncertainty or decline, investors traditionally flock to assets that provide a hedge, like silver. This cyclical behavior has historically led to price surges in silver during times of economic downturn, as people look to protect their wealth. What's interesting now is that we're witnessing several economic indicators pointing toward a new bullish cycle for precious metals. The demand for safety combined with rising industrial need for silver means that this could be one of the strongest cycles we've seen in years. So if history is any guide, silver could be gearing up for a major upswing. But this is just one part of the equation. Stick around because next, we'll dive into the challenges within silver's supply chain and why this bottleneck could send prices even higher.
People's Bank of China. Everybody thinks that the People's Bank of China has been buying gold. They got it the wrong way around. Actually, what they're doing is they're selling dollars. So they're trying to get out of dollars. Now, there is a political element in that, sure. But the Chinese can see exactly what's happening. I mean, the debt trap, which I've just described, the Chinese understand this. They're not idiots. The Russians understand it, and they're just watching the whole thing about to topple over. And, and nobody wants to get blamed for the whole thing falling over. But the foreigners in particular understand that you've got to sell dollars. So what do you buy? Do you buy euros? Sterling? Not really. I mean, you might get out of dollars into some of that stuff, but it's in exactly the same trap as the dollar, just maybe not quite so bad in some cases. Where do you go? You go into gold. Why gold? Gold is legal money without counterparty risk. All the rest is credit with counterparty risk, particularly fiat currencies. I mean, what you have with the dollar is it depends entirely on the faith you have in the US government. Foreigners' faith in the US government, is this something that is likely to persist? I think foreigners at the margin are beginning to doubt their faith in the dollar. And it always starts with the foreigners. They're the first to understand that they shouldn't be holding a fiat currency. The residents of a country who use the currency don't actually appreciate this in the initial stages. They will do a double take on this and they will think, well, prices are rising. This is terrible. They don't actually connect it with the falling purchasing power of their currency. But when they do, then the currency is toast. It's had it. It's finished.
Now, let's dive into something most people overlook: supply chain and mining challenges. Unlike other metals, silver isn't mined on its own very often. It's typically a byproduct of mining for other metals like copper or zinc. This means silver production depends heavily on the performance and priorities of these other industries, which is a risky setup, especially in today's global market. With mining companies facing economic pressures, environmental regulations, and increased production costs, we're seeing a real bottleneck in silver supply. Couple that with rising demand, and you have a perfect storm where silver could become scarce. And that scarcity can drive prices sky high. Think about it. A limited supply, paired with ever-growing demand, could push silver into uncharted price territory. And we're just getting started. Next up, we'll explore how silver's status as the poor man's gold actually makes it a hidden gem for investors.
But the key difference between Japan and us and the US is that in Japan, they actually have a savings culture. So in other words, when they expand the quantity of credit in the economy, it just goes into savings rather than immediate consumption. That is why their inflation numbers are lower and why, therefore, they can continue to run with a lower level of interest rates without killing the yen. Now, obviously, there is a limit to which that applies, and it's not a pure argument because the government does actually subsidize things in the CPI like transport costs and so on and so forth. But the key thing is that if you've got a savings-driven economy, you have lower inflation than you will have in an economy without savings or with falling savings. And that, of course, is it was the old Anglo-Saxon problem. I mean, if you go back to pre-Euro days, we knew exactly the difference between what was going on in the Anglo-Saxon economies, in other words, the US and the UK, compared with, in those days, Germany under the Deutschmark and Japan with the yen.
Yeah, and I guess that's sort of what's happening in China as well.
Yes, you're absolutely right. I mean, the savings rate in China is enormous. The estimates say that, and again, I always qualify these statistics, But there is little doubt that in China, the household savings are enormous. I mean, the statisticians say that they amount to 35% of GDP. Now, that's the equivalent of $6 trillion. $6 trillion every year. It's no longer going into property. If you look at the sort of Shanghai stock market index, that certainly doesn't enthuse anyone. I mean, it's been in a bear market for 3 years, apart from this year when it's actually picked up a bit. But that's not likely to enthuse the housewife, if you like, in Shenzhen or wherever. So where does it go? It goes on to bank deposits, and they're lowering the interest rates because they're trying to stimulate the economy. I mean, the Chinese have a touch of Keynesian fever, I think. But the important thing about this is that this money, these savings are likely to flood into gold. Why? Because there is really nowhere else for it to go other than bank deposits, which are now paying even less.
Let's dig into silver's reputation as the poor man's gold. This nickname might sound unflattering, but it's actually one of silver's biggest advantages. Unlike gold, which can be out of reach for many small investors, silver's affordability allows more people to buy in. And this accessibility is no small matter. When economic uncertainty strikes, people look for reliable assets that they can realistically invest in, and silver fits the bill perfectly. With silver, investors can buy larger quantities, giving them more potential for significant gains, even with minor price increases. This accessibility can create a wave of new investors who might otherwise skip the precious metals market entirely. So while gold may get the glory, silver's affordability means it has a powerful, growing audience ready to drive demand and potentially push prices higher. But silver's accessibility isn't its only advantage. Up next, we'll explore how it compares to other safe haven assets and why it's standing out this year more than ever.
Of course, at the moment, everybody's talking about BRICS bringing in a gold-backed currency, which of course makes an awful lot of sense. But I mean, looking at how that's developing, I mean, there are a couple of guys who actually aren't even appointed by any government agency. One Russian, one Chinese, makes you think that this was a government thing. No, they're just fund managers. Actually, they've come up with this proposal called a unit. And it's clear from the way they've constructed, they don't understand the difference between money and credit. I mean, there's absolutely no mention in their paper about the interest rate which the unit will bear. I mean, it's got to have an interest rate, otherwise there's no point in having it. So you can see that there are big flaws in their arguments. It's not only that, it's not something that either China or Russia as governments have engineered, if you like, to put on an agenda in the big summit in October. And at the moment, they're all sort of, going around in circles, trying to sort of say, well, this is going to be difficult, because we want to have a basket of this and a basket of that. I mean, it's just complete nonsense. They will never agree it. So that's not going to happen. So from Russia's point of view, she's got to put herself on a gold standard. And then, I mean, it's actually very easy for a new trade settlement currency to be put on, to be created onto a gold standard. You could do that tomorrow. And I think the answer actually is, if they really want to do that, you don't sort of put it on the agenda or whatever. You create it and then you say, well, it's there if you want to use it. And they'll use it. It's quite simple. So I think there's a lot of misinformation, disinformation, whatever, about the whole thing. But I'm convinced that Russia will go on a gold standard because it is so definitely in her interest to do so, either as an aggressive weapon against the dollar, or more likely to protect the ruble from a collapse in the dollar. Because as I say, the dollar is in a debt trap. When we were in a debt trap back in the mid-70s, we were rescued by the dollar and the IMF, there is nothing to rescue the dollar. So from Russia's point of view, I'm sure she's already thinking in terms of a gold standard. Now, whether she implements it properly or not, of course, is another matter. Because you have the problem that central bankers got very jealous about the gold that they have accumulated in their reserves. They don't want to give it away to anyone, let alone their own population. So you can see that, there's some vested interests which have got to be overcome. But it's so simple, it really is.
Now, let's compare silver to other safe haven assets. Traditionally, investors turn to assets like gold or government bonds when they want to protect their wealth. But here's the interesting part. Silver offers something these other assets don't: a unique balance of stability and growth potential. Silver has the safe haven status of gold, but with much more potential for explosive growth because of its industrial applications. And let's face it, government bonds and cash savings are struggling to keep up with inflation. Silver, on the other hand, provides a hedge against inflation with the added upside of being a resource and high demand for industry and technology. It's rare to find an asset that can diversify a portfolio, protect against inflation, and also bring in gains during uncertain times. This rare combination makes silver more than just a backup to gold. It's emerging as a star player in today's volatile market. But we're not done yet. Next, we'll dive into the recent surge in silver investments and what it means for the months ahead.
It's just remarkable. I mean, obviously, they've managed to achieve this because they sell an awful lot of oil and other commodity exports. But the other thing is that the level of taxation is a flat rate of tax of 13 to 15%. I mean, if you're really earning a lot, it's 15%. No more than that. Corporation tax, I think, is in the order of about 25%. So that's pretty normal, I suppose. So Russia doesn't have to do an awful lot to, in terms of evolving its economy in order to put it on a gold standard. It could do it tomorrow if it cared to do so. And it's very easy for a country which actually understands what it's doing to build its gold reserves and maintain them so that that cover is always there for the currency. And, in this article, which will be coming out, as you say, on Thursday, probably slightly before this comes out, actually explains the whole thing. I mean, it's very easy to do. But of course, the problem in the West is that governments don't like a strict, sound currency because it means they can't just sort of print it at will. They can't just finance their deficits at will. The politicians just want to spend. They don't want the constraints of the market. They don't want the constraints of gold. So, basically, they will continue to spend us into bankruptcy. But Russia and China, for that matter, will need to protect themselves from our collapsing currency, because if our currencies collapse, any other fiat currency will go with it. I mean, because it's the whole of the fiat currency system which is really well past its use-by date. So Russia, I think, is going to have to consider doing this. Now, of course,
let's look at what's been happening with silver investments recently. Over the past few months, there's been a noticeable surge in interest, especially through ETF and physical silver holdings. Investors from all walks of life, institutions and everyday investors alike, are pouring money into silver as they recognize its potential as both a hedge and a growth asset. Why the sudden rush? Simply put, the word is out. More people are waking up to silver's unique advantages, and as a result, demand has been climbing rapidly. ETFs, in particular, make it easier than ever to gain exposure to silver without dealing with physical storage, driving even more investors to buy in. As these trends continue, the growing demand could push prices up further, creating a feedback loop where rising prices attract even more investors. So, with all these factors lining up, it's no wonder experts like Alasdair Macleod are predicting record-breaking prices. But this trend goes deeper than just recent buys. Up next, we'll explore how the green energy revolution is shaping the future of silver demand like never before.
Fiat currencies only last a certain amount of time. our fiat currency system, which I suppose has basically been, well, sort of post-war, because it was a fiddle under Bretton Woods. But when Bretton Woods fell apart, then, I mean, we're looking at what, 50, 52 years, 53 years of fiat currency, pure fiat currency. I think it's almost time now, if you like, on sort of, if you look at the survivability of fiat currencies, we've done pretty well lasting this long. It's now, I think, about to fall over. I mean, as I say, I don't know whether it's tomorrow or in a year's time or 2 years' time or 3 years' time, we'll see. But we will go back to credit being secured to the value of gold. And in order to do that, you need to have as much convertibility as possible from what becomes, instead of being a fiat currency, it becomes a gold substitute into gold, and vice versa. And a properly constructed gold standard basically means that nobody bothers about gold anymore, but the values are secured to it, which is the important thing. And you don't need to hold gold. You can actually hold the currency and use it productively. So, but the one thing that is necessary for this really to work is to have an economy which isn't dominated by government spending and has relatively low taxation. So there is the incentive for entrepreneurs to rush out and invest capital in production. And actually, this is precisely the situation in Russia. The debt to GDP in Russia, government debt to GDP, is in the order of about 21, 22%. And that's even after all this war spending.
Let's talk about a game changer for silver, the green energy revolution. Silver is a critical component in renewable energy technologies, especially solar panels. As countries and companies around the globe pushed to meet ambitious environmental targets, the demand for solar energy, and by extension silver, continues to soar. In fact, the energy sector is now one of the largest consumers of silver, and this demand is only expected to grow. Imagine this. Every time a new solar panel is installed, the demand for silver goes up. And with green initiatives accelerating, silver's role in solar technology means its demand could skyrocket in the coming years. This green revolution is setting up a scenario where silver isn't just a financial asset, but also an essential resource for sustainable development. So, while traditional investments are one story, silver's critical role in green technology adds a new layer of value. But that's not all. In the next segment, we'll explore how inflation and the devaluation of traditional currencies are adding fuel to silver's upward momentum. Stay tuned.
It's a separate question. But even without that, we're not in good shape.
Yeah, it's scary to think. And I think maybe, some people are realizing this effect with the inflation we've seen over the past few years. It's not to the extent of what you saw in the 70s, but it's still just definitely hurt a lot of people.
Yeah, I fear so. But you ain't seen nothing yet. Was it Yogi Berra who said that? So yeah, no, it's. I think there's quite a lot to worry about, and when it comes to Ukraine, you can see it's absolutely clear that there's a huge strategic mistake being made by the Ukrainians. I think pushed by us, because both the UK and the US, I think, have encouraged the incursion into Kursk. Some sort of bridgehead, some sort of create the precedent that we can, steal some of Russia from Russia and get away with it and all the rest of it. But actually what it's done, and any military strategist would have said this was crazy. What it's done is it's just divided Ukraine's forces. It's taken elite troops away from the Donbass, protecting the Donbass and the eastern borders of the Ukraine, into a ridiculous operation without any air cover. And really no troops there to fight. They're just going round and round and round in circles, and the logistics of supplying them put further strains on the whole thing. And meanwhile, the Russians are happily bombing sort of military centers, if you like, within the Ukraine, killing even Swedes. I mean, why Sweden is in this, God alone knows. The government signed up for this NATO thing without even consulting anyone in their populations. And when I went to Sweden not so long ago, I can tell you that there's a certain amount of anger about that. And rightly so. I mean, the country has stayed out of wars by being neutral since shortly after the Napoleonic Wars. We're making mistakes after mistakes with Ukraine. And my own personal view is that I don't think Zelensky's actually got very long. I think, he'll probably be chucked out by Ukrainian forces. I mean, I think that there is a general discontent within the Ukraine about how this is going. I mean, we could, Zelensky could have accepted a peace proposal almost at the beginning of this. I mean, after a couple of months, there was an arrangement, if you like, whereby they were all meeting in Turkey in order to sort this out. And then Boris Johnson came along and said, don't under any circumstances agree to a peace deal. And what's happened? I mean, how many tens of thousands of Ukrainian lives have been lost since then? I mean, we're culpable in this. This is not good. And we're dismissing it all with propaganda. I mean, wake up.
Now, let's consider one of the biggest drivers behind silver's rising value: inflation and the devaluation of traditional currencies. With the cost of living climbing and global currencies facing devaluation, more investors are turning to hard assets like silver to protect their wealth. When inflation rises, the purchasing power of cash declines, making precious metals a safe haven for preserving value. Silver, in particular, has shown resilience during times of high inflation, as it's not only an investment asset but also an industrial one. This dual nature gives silver an edge. While it safeguards wealth, its market demand also continues to grow. Unlike paper currencies, silver can't be printed or devalued at will, which is precisely why more investors are seeing it as a hedge against currency instability. But there's more to the story. Up next, we'll explore Alasdair Macleod's bold predictions and what he and other market experts are seeing on the horizon for silver. If you think silver's potential is big now, wait until you hear what's coming.
Trying to do now really is to educate people from what I see as economic catastrophe. It's the accumulation of the mismanagement of our economic affairs, which actually go all the way back to President Hoover when he tried to start interfering in the economy to try and get an outcome which was sort of favorable. I mean, with the best of sort of Christian intentions, if you like, but a huge mistake, because until he came along, everybody knew that the worst thing a government could do is actually interfere in the economy. And, you would have the cycle of bank credit, which led to, slumps and all the rest of it. But the slump, if you interfered with it, the slump just prolonged. And that's actually what happened in the 30s. But ever since then, I mean, particularly Keynes, he came up with he invented macroeconomic theory on the back of his general theory. And it was the excuse for governments to continue to intervene and just make things worse. And this is all culminated, I think, in a crisis today. The first crisis was it drove the dollar off the Bretton Woods system. It ended the Bretton Woods system. And that was, as I say, 52 years ago. And since then, I mean, we've just sort of struggled with these currencies, which have lost huge amounts of purchasing power. I mean, if you look at the dollar, measured in gold, which is real money, legally real money, incidentally, the dollar has lost over 98% of its purchasing power since 1971. In fact, if you go back to the rate at which it was fixed in 1900 and was changed in 1934, which was 20.67, it's lost over 99% of its purchasing power. That is the degree of corruption of monetary value that has happened. And it's entirely down to governments. entirely down to governments. That's got to change. That will change. And I want to educate people as to the difference between money and credit, what is actually going on with credit and the risks in credit, and how they should protect themselves from those risks. And that is the purpose of my Substack.
Perfect.
It's time to bring in the expert insights. Alasdair Macleod and other market leaders are making bold predictions that could reshape how we think about silver. According to Macleod, the conditions are aligning for silver to break all previous records and reach unprecedented heights. Why? Because of a perfect mix of economic instability, soaring demand from industry, and silver's critical role in emerging technologies. Macleod points to the fact that, with everything from inflation to geopolitical tensions driving up uncertainty, investors are looking for assets they can trust, and silver checks all the boxes. He isn't alone in this view. Other experts are echoing his predictions, noting that silver's unique position as both a safe haven and a growth asset makes it one of the most compelling investments of the year. This isn't just speculation. It's grounded in the realities of today's market. Silver's demand is projected to keep rising, and with limited supply, we're looking at the potential for a historic surge. But what does this all mean for you as an investor? In our final segment, we'll tie everything together and explain exactly how these factors could push silver to new all-time highs.
The answer is that your gold reserves are maintained by having the correct level of interest rates. Interest rates will ensure that gold flows into or out of your reserves in the desired quantity. I mean, this is the thing that they learned from the errors in the drafting of the 1844 Bank Charter Act. They didn't understand that the important thing is that it's the interest rate, because if your currency is a proper gold substitute, right, then what you can do is you can go into another country, buy gold, which, I mean, if you look at the lease rate at the moment, it's 2% roughly, okay? So your cost of gold is 2%. In Russia at the moment, the central bank's deposit rate is 18%. Well, their main rate is 18%. 18 minus 2 is a 16% margin. I mean, and what are you being paid in? You're being paid in rubles, which are a gold substitute. It's just the same as being paid in gold. So, the arbitrage is very, very simple. And that's the way in which you balance your gold reserves. It's got nothing to do with your trade. Your trade is actually more a function of government excess spending if you've got a deficit. I mean, it's quite simple. You just got to back the currency properly and use interest rates for that purpose, not for trying to manage the economy to sort of, which is huge mistake. And this is where the central banks have got the whole thing so horribly wrong. They don't understand that the function of interest rates is to do with the purchasing power of the currency, maintaining the gold reserves. It's got nothing to do with stimulating the economy. That has to go. So you put it into an issue department, keep it out of the banking department, keep it in the issue department with simple instructions. You run interest rates issue department, and you run it with an eye to maintaining your gold reserves. Full stop. Not difficult.